Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
We are back looking at the CXC Principles of Accounts January 2024 paper. Our focus for this session is on question 3 response, where candidates were tested on receipts and payments accounts and bank reconciliation statements. Now, if you have missed questions 1 and 2, the links are in the description below. Let's get right into the question. Do remember to read your question first. And it reads, Simba United Sports Club was formed 2 years ago. All receipts were paid into the bank and all payments were made by check. The following is the receipts and payment account, which was prepared by the club secretary for the year ended December 31st, 2023. The secretary has little knowledge, very little knowledge of accounting. And from you see this, you know clearly that there are some errors. And below, we have the receipts and payments account. And what we are required to do is to prepare the corrected receipts and payment account for Simba United Sports Club for the year ended 31st of December 2023. Balance the account at the end of the year and show the opening balance for January 1st, 2024. So basically, prepare the corrected receipts and payment account and balance it off. And you're to use a form that is provided. Now, the first thing that you will enter is the title, the heading, which reads Simba United Sports Club Receipts and Payments Account for the year ended 31st of December 2023. And we're going to the question to extract all that we need for the receipts and payments account. But do remember, the left-hand side, which is our debit side, is our receipts, and the right-hand side is our payments. Apart from that, remember, all amounts received were paid into the bank. The bank is an asset. And once there's an increase in the asset, you are to debit. So remember, you debit receipts, and we're going to credit the payments because once you make a payment, that's going to cause a reduction in the bank balance, and that is an asset. So therefore means that we are to credit the reduction. So receipts are debited and payments are credited. So with that knowledge, let's look at the receipts and payments account that was prepared by that secretary. And we're going to look at the debit side first. Now, the first item that we're seeing is balance brought down January 1st, 2023, and we're seeing in bracket bank overdraft. So it means that there's an overdrawn balance at the beginning of the accounting period. Now, once there's bank overdraft, it means that this is a credit balance. Credit balance because the business is owing, so therefore that is a liability, and liabilities carry credit balance. So this item, the opening balance, should be on the credit side of the receipts and payment account, and we're going to make that entry in the receipts and payment account. Don't forget that your date is important. So the year is 2023, and for the beginning of the period, which is January 1st, balance brought down 4,500 on the credit side. You could go ahead and put bank overdraft in bracket, but once you have a receipts and payment account and the opening balance is on the credit side, it means that it is an overdrawn balance. Let's go back to the question to pick up the next item, and that is insurance expense. Insurance expenses basically mean that the business will be paying for this. So this should not be on the receipt side, it should be on the credit side, which is the payment side. So let's make that correction. So insurance expense credited and the amount is 3,200, again, because that is a payment. Back to the question. Next item is printing and stationery expense. Now, this as well should be credited. So we're going to put that on the payment side. And let's get back to the question. Donations received. It said received. So remember, our debit side is our receipt side. So definitely this item is on the correct side. So all we're going to do is to put that on the debit side of the receipts and payment account in our corrected receipts and payment account. Also remember, once you received, you would have received that donation. It means that that's an increase in the value of your asset. So it therefore means that you would debit the bank account. In this case, because it's a non-trading organization, it is referred to as receipts and payment account. So let's make that entry. Again, that should be debited. Donation received, and the amount is 5,500. Also, when you're transferring the amount, people, ensure that you put in the correct value that is in the question. Let's get back to the question, and our next item is general expenses. Again, that is a payment, so that should be credited. So we're going to put that on the payment side. General expense, 2,530. Back to the question. Final item on the debit side, purchase of computer desks. Once you're purchasing something, it means that you have to pay for it. So that should be on the payment side. Apart from that, that's a reduction in the asset of bank. So it therefore means that we are to credit the account. And let's make that entry. Purchase of computer desks, $6,260. And that would complete the list of debit items. Let's move on to the credit side, which is our payment side. And that is the payments credit. Remember, we're looking for those items that would cause a reduction in the bank value. And if it is that it is not a payment, it should be on the receipt side. In that meaning, the business would have received some amount of money based on the activity. So that should be debited. So the first item that we have is rent expense. Rent expense, yes, that's a payment that is on the correct side. So all we're going to do is to record that back on the credit side. And then we move into the next item, which is sale of old equipment. And if you sell the equipment, it means that the business will be receiving the money in return. So it therefore means that that should be debited, because that's an increase in the value of bank. As they indicated, all receipts are debited to the bank account, are placed into the business bank account. So that should be on the debit side. So let's record that in our receipts and payment account. Sale of old computers, 6,700. Next item is snack bar sales. And it means that if you're selling something, again, the business is receiving the value in return. So that's an increase in the bank account, and therefore means that we should record that on the receipt side of the receipts and payments account. So that should be debited. So let's enter that. Snack bar sales, 7,430. Again, remember, ensure that you double check the values as you transfer them in the corrected receipts and payments account. Next item is snack bar purchases. No, you're purchasing snack for the bar. It means that the business will be making payment for those snacks. So that this item should be on the credit side, and we're going to keep it on the credit side in our corrected receipts and payment account. Next item is subscriptions received from members. And it said receive. Receive, it means that this should not be on the payment side. This should be on the debit side, which is our receipt side, because the business is getting that money from the members, their subscription, their dues, basically. So that's a receipt for the business. That's an increase in the bank balance. So that should be debited. So let's record that on the debit side in our receipts and payment account. Subscription received, 6,800. And that would take us to the end of everything from the receipts and payment account that was prepared by the secretary. And we now need to proceed to balance off the corrected receipts and payments account. Remember, in balancing off account, there are 5 simple steps. First, add up each side to find out what's the total. Next, find the difference between each totals that you receive, so the one for the debit and the one for the credit. The difference that you get is called the balance. This value is then entered in the account on the side that is short. So in this case, the side that is short for us in this receipts and payment account is the credit side. So we're going to enter the balance carried down of $1,150. That's $1,150. That's the difference between the two sides. And it's on the credit side because the credit side is short. Having entered your balance carried down, and note, that's the first time you're entering in the account when you're balancing up. You don't make any entry in step 1 where you add. You don't make any entry in step 2 where you find the difference. It's when you get to step 3, you enter your balance carry down, which is on the side that is short. Having entered your balance carry down, the next step is to enter your totals. And our totals in this case is 26,430 for the debit and the same 26,430 for the credit. And having entered your totals, ensure that those are on the same level, in the same row basically. And once that is done, you're on to the final stage, which is to enter your balance brought down. Now note that your balance brought down is recorded at the beginning of the next period. So if we're at December 31st, 2023, our next period begins January 1st, 2024, and our balance brought down is entered on that side, on the debit side, opposite of our carry down. Also, that is on the larger side that we would have established in step 1. And do ensure that your balance brought down is recorded below, and I said below your totals, not in the same row as your total, not above your total, but below your totals. And remember, balance brought down is on the opposite side of your carried down. And I stress this because people tend to have difficulty with balancing off accounts. Remember, it's just 5 simple little steps. All it takes is practice. Now, our next task for this question is testing our knowledge on bank reconciliation statements. So this is part B of the question. The bank columns of the Simba United Sports Club's cash book for the month of October 2023 were as follows. And notice you have received the cash book, and you have also received the bank statement for the same month of October 2023. Now, additional information presented is that a comparison of the 2 records reveal the following errors. The treasurer brought down the opening cash book balance on October 1st, 2023 incorrectly. It should have been $8,850. Now, if you looked at question 1, you would notice that you were tested. Candidates were tested on correction of errors, and correction of errors is also in this question as well. The other thing, which is the next note, is that the bank charged Simba United Sports Club's bank account in error for electricity on October 15, 2023, which should have been debited to another customer's account. So this is entered in Simba's account and it should not be there any at all. So that correction would have to be made from the bank and from the bank statement. It's not related to the business cash book. So it therefore means that when we're proceeding to respond to the question, we are not going to enter this in the updated cash book. This correction has to be made from the bank's end. It only affected the business balance on the bank statement. Now, having gone through all of that information, Part I states, refer to the information provided in the cash book and the bank statement on page 14. Use the form provided below to record all the entries needed to update the cash book on October 31st, 2023. And an example has been provided for you. And looking at this, you would notice that it's not a regular ledger account that you are asked to prepare. You're presented with a form. And all you need to do is to indicate in this column the details. And if it is that that item would decrease the cash book balance, you would credit that. And if it increases the cash book balance, you debit. So we're going to the question because we will need to compare the cash book and the bank statement to see the items that are similar. And then from there, we will determine what would need to go into the updated cash book to adjust the cash book balance and what we would need for the next part of the question, which is going to ask us to show the adjustment to the bank statement balance. So basically, you would need your bank reconciliation knowledge for that section. So let's proceed to do our comparison to see the items that are similar. We're going to compare the debit column of the cash book, which is the bank column only, the debit side with the credit of the bank statement. The debit in our records, in our cash book, indicates that there's an increase in our bank balance. But in the bank, once there's an increase in your balance at bank, the bank records that as a credit. Because the more you enter in your bank account, it's basically telling the bank that they are owing you more, because the bank sees us as a liability to them. So the more we enter is the more they have for us. So again, we compare our debit in the cash book with our credit in the bank statement. So let's proceed to see what we have on the debit of the cash book and what we have on the credit of the bank statement to see if we find anything that is similar. So we have October 11 here, $1,500 for subscription from AL. And if you look in your bank statement, we're seeing that as well. And we strike through the items that are similar. You can tick them off, do whatever you need to do to indicate that these items are similar. They are the same. Next, we are going to continue checking the debit with the credit, and I am not seeing anything else that is the same. So we're going to proceed with the credit of the cash book and the debit of the bank statement. So the cash book is saying petty cash fund, $200. Go to the bank statement. We're seeing that same check number of 3,000, same value of 200. So we're going to highlight those. They're the same. Next, we have the general expenses, 900 in the cash book, and it is also there in the bank statement. We also have the snack supplies limited, check number 3002, also in the bank statement. And checking if there is anything else, and there is nothing more that is similar. So we have only found 4 items that are the same. It's on the cash book and also on the bank statement. So our focus now will be on those items that are not checked. And we're going to determine what items go to the cash book, and anything that is unchecked in the bank statement should go into the updated cash book, except for the electricity, which we were told that the bank made an incorrect posting to our bank account, the business bank account that should not be there, to Simba's bank account. So the first thing that we're going to pick up for the updated cash book, which they would have done that for us already, and that is the balance. The balance brought down, the opening balance, you would have noticed that there is an error. So what we're seeing is that the cash book is showing an opening balance of $8,950, while the bank statement is showing $8,850. Now, if you look back at the question, the follow-up to the question in terms of the information provided, additional information, you're seeing where it stated that the treasurer brought down the opening cash book balance on October 1st, 2023 incorrectly, and it should have been $8,850. So the error is not with the bank statement, the error is with the cash book. So it means that this should go to the updated cash book. Now, looking at this type of error, you're seeing that it is an error of original entry because something is wrong with the value that was recorded. Once you have an error of original entry, it means that you're going to have a case where there is an overstated value or an understated value, meaning there is some amount that is entered more than the amount, or it is entered less than the amount. It is too much or it is too little. Now, in this case, we're seeing that the treasurer had entered $100 too much. So in this case, to get rid of the extra 100, the cash book would be credited to cancel out that extra 100 that is placed on the debit. So in this case, notice that in the question, as they indicated, the first one was done for you, cash book opening balance error, difference between the 8,950 and the 8,850 give us 100, and that should be credited to make that correction. Now, the next item that we are going to look at that would be placed in the updated cash book, remember, the 15th does not affect the cash book, even though it is not highlighted. It is an uncommon item. But going back to the question, you see that this was charged incorrectly to our account. So it is not with the cash book, as I indicated earlier. It is with the bank statement. So we're going to leave this until we get to the bank reconciliation section of this question. Going back to the question, doing our comparison, picking up the items that are uncommon in the bank statement to put them in the cash book. Our next item there will be the dishonored check. Now, the effect of the dishonored check, you're realizing that it's a debit to the bank statement. So it means that we now need to credit that in our updated cash book, because a debit in the bank statement shows that there's a reduction in your bank balance. So in our cash book, we are going to credit that $1,500. So the details is dishonored checks, AL, and the cash book should be credited with that $1,500. Moving on to the next item, that is the bank charges, and that should be entered in the updated cash book, and that is $120. Bank charges decreases our bank balance, so therefore we are going to credit our cash book. And apart from that, remember, once the item is debited on the bank statement, you should credit your cash book to update it. So that is bank charges, credit of $120. Going back to the question, and the next item we're picking up is the standing order. Remember, we're picking those items from the bank statement that were not checked, the items that were not common. Those go to your updated cash book. And this is a standing order of $370. The standing order was paid out for water of $370. So that's a reduction in our bank balance. So we're going to credit that to the cash book to update it. So standing order for water $370 credited to the cash book. Moving on to the next item, which is credit transfer. Notice that the credit transfer is credited on the bank statement, which indicates that there should be an increase in our bank balance. So that should be debited in our updated cash book. Apart from that, in bracket, you're seeing donation from club member T. Bree. The donation there would be a receipt for the business. So therefore, that should be debited to the updated cash book. So let's make that recording, and that is credit transfer donation from T. Bree, and the amount is $1,000. And remember, that is debited. So all we did was to pick up those items that were not common on the bank statement and enter those in the updated cash, because that would affect the business bank account. And that's all we were required to do for this part of the question. So we're going to move into the next part of the question, and that is part 2, which states the treasurer of Simba United Sports Club wishes to confirm the position of the club's available cash at month end. Use the information from the cash book and the bank statement on page 14 to complete the form provided below. For each of the items identified in the table below, place a tick in the correct column to indicate how each item should be treated against the bank statement balance when preparing the bank reconciliation statement. Now, because it states how it would affect the bank statement balance, it means that you're going to be looking at the bank's reconciliation statement format where you start with the balance as per bank statement. And just a reminder, this is the balance as per bank statement. Pick up your late lodgements. You're going to add your late lodgements. Where do we find our late lodgements? Those items are the unchecked items, the uncommon items on the left-hand side of our original cash book. And those items would not be in your bank statement. So it was a debit to your bank account. However, the check or the bank would not have knowledge of this, because the check would not have gone to the bank before the bank statement was prepared. So entity is not on the bank statement. So remember, late lodgements are on the left-hand side of your cash book, those unchecked items. Next step is to list your unpresented checks. Your unpresented checks are those checks that were paid out, but when the bank statement was prepared, the bank has no knowledge of it. So therefore, it means that that would not be on the bank statement. So those are the unchecked items on the credit side. And then that would give you your balance as per updated cash book. But all we need from this is to know what we're going to do with the late lodgement and what we're going to do with the unpresented checks. So if any of these items is late lodgement, that should be added. And if it is that it is unpresented check, that should be subtracted. So late lodgements are those items coming from the left-hand side of the original cash book, the unchecked items, and the unpresented checks are coming from the credit side of the cash book, the original cash book, and those should be deducted. Now, before we look at this, let's go back to the question to identify those items that would affect the bank reconciliation statement, those items that we need to prepare the bank reconciliation statement. In that, we are looking for late lodgements and or unpresented checks. And do remember that there's an error that was made to the bank statement by the business. So the items for the bank reconciliation statement are the APOC Limited, which is, this is found on the credit side, so that is on an unpresented check that must go to the bank reconciliation statement. Why? It is the unchecked item that is in the cash book, but not on the bank statement. And that's on the credit side. And that's the only unpresented. We have the late lodgement from Ajani Plumes. And this item is on the left-hand side of the cash book. It is not on the bank statement. It is a late lodgement. The sales on October 28th as well is also a late lodgement. There is another item. It is not in the cash book, but remember, we were told that there was an error made at bank. And this is October 15th. This $540 that was charged to our bank account by the bank in error affected our bank statement balance, and it was debited to our bank account, meaning that they took this amount out of our business bank account, which is Symbols United Sports Club bank account, in error, must be placed back in the bank account to adjust the bank statement balance. So it therefore means that that should be credited. And in this case, it should be added back to our account. So those are the 4 items that would be used to adjust the bank statement balance. So let's look at what they want from us first. And we're seeing where they are asking us for October 15, 2023, direct debit electricity. And again, as established earlier, this $540 was taken out of our accounting error. So it had reduced our bank statement balance. So we're going to add it back to the bank statement. So this $540 should be added. So therefore, we put in the check mark there to show that it should be added. The next thing is October 16, 2023, Ajani Plumes, $5,400. And we need to go back to the question to determine whether or not this is a late lodgement or an unpresented check. So again, that is the 16 Ajani Plumes. And we're seeing that it's on the debit side of the cash book, but not in the bank statement. So it therefore means that this is a late lodgement. So how do we treat the late lodgement in terms of adjusting our bank statement balance? Late lodgements should be added. So we are going to indicate that this should be added by putting the check mark under the column that says added to bank statement balance. The next item is October 28, 2023, sales of $3,670. Let's get back to the question to see where that was. And October 28 sales, $3,670 is on the left-hand side of the cash book, but not on the bank statement. Again, in this case, this is a late lodgement. How does late lodgement affect our bank statement balance? It's an increase in the bank statement balance because remember, based on the formula, the format, you should add late lodgements. And in this case, October 28 should be added to bank statement balance. So the check mark should be placed under added. And we are on to the 29th, which is APOC Limited. This is on the credit side of the cash book, but not on the bank statement. Once it's on the credit side, but not on the bank statement, it is an unpresented check. The effect of unpresented check on our bank statement balance is that it would decrease our bank statement balance because we're saying based on the format that we should list unpresented checks. So in this case, APOC Limited for October 29th, a value of $4,400 should be deducted from the bank statement balance. And that takes us to the end of this question. In our next lesson, we will look at question 4, And again, if you have missed questions 1 and 2, the links are in the description below.
Like, share, and don't forget to subscribe.